Hello. U.S. stock futures rose slightly today, hinting at a rebound from losses in yesterday's session that were sparked by a downgrade of several regional banks by Moody's, a risk assessment and credit rating firm. Moody's yesterday slashed its ratings of 10 mid-sized lenders while putting emphasis on their concerns over sluggish deposits, elevated funding costs, and risks to commercial real estate assets. The move aggravated renewed fears over the health of the U.S. banking sector, which is attempting to regain its footing following the failure of 3 regional lenders earlier this year. Oil hit new peaks today, with Brent crude touching the highest since April as tighter supply owing to Saudi and Russian output cuts offset concerns over slow demand from China and a report showing rising U.S. crude inventories. Saudi Arabia's cabinet announced yesterday that it reaffirms its support for precautionary measures by the OPEC Plus to stabilize the market. Some bearish pressure came from American Petroleum Institute figures released yesterday, which showed U.S. crude stocks rose by 4.1 million barrels last week. According to a Reuters report, Amazon is in negotiations over joining a number of other technology firms as an anchor investor in SoftBank-owned chip designer Arm's planned initial public offering. The e-commerce giant would be one of about 10 tech sector players who are reportedly eyeing a cornerstone stake in Arm, including Nvidia and Alphabet. Arm hopes to list on the Nasdaq in September and is aiming to raise between $8 billion to $10 billion. For Amazon, the investment in Arm would also highlight its increasing focus on cloud computing. Lyft reported second quarter EPS of 16 cents yesterday, crushing estimates of a 1 cent loss per share. Revenue for the quarter came in line with expectations. Boosted by the positive results, Lyft shares gained over 5% during trading hours yesterday. However, the stock has lost its gains and more in pre-market today as investors feared the ride-hailing platform's focus on competitive pricing would hinder its profitability. To recall, Lyft and its more dominant rival Uber has been locked in a fierce price war ever since the end of the COVID-19 pandemic. As PhillipCapital team, we wish you happy and healthy days.